All right. My name is Chris Campbell. I'm a practice mediating, and I work with small and mid-sized businesses to help them, pay the amount of tax as possible while keeping them out of jail. So then I wanted to talk about gift taxes. Just for a second. And this comes because sometimes get questions about it, and mainly because people don't necessarily understand how it works. I'll get a call from a client, hey, I'm received XYZ gift or XYZ inheritance. What are my tax implications? Like, how much do I owe in taxes? So I get that often because you hear about a gift tax, but I know a lot of people don't necessarily know how it works. So wanted to break that down for a little bit here, give you some thresholds as far as like when gift tax kicks in, what you have, and things to consider when receiving gifts. So the biggest thing is that when they talk about gift tax, the tax is actually not paid by the recipient. The tax is actually paid by the donor, right? Or the person given the gift. So first and foremost, any gifts that one receives is actually tax-free to that person, at least as a gift, I'll say. There's no gift tax involved with anyone that is receiving gifts. Now, whether that be in the form of money, in the form of assets, it's given to you, there's no gift tax. Now, there could be what's called an inheritance tax in the event that you inherit it. That's something that I'll talk about in a few minutes. But if someone is just giving you a gift and let's say the person's alive still, they give you a gift, there's no tax associated with that. Now, the tax is actually associated with the person that gives the gift, the donor, and there's a threshold for that. So if said individual gives over a certain amount over their lifetime, and actually as of today, 2026, that threshold is $15 million. So if one were to give away more than $15 million over the course of their life, a gift tax would apply. Now, there are a couple of exceptions around that, and one of them being gifts to spouses. So one can give unlimited amount of gifts to their spouse without any consequence. So any gifts to spouses do not count against the $15 billion lifetime exemption. So give as much as you want to your spouse. So it can go both ways, right? The other exception is that there is a yearly annual limit before it counts towards your $15 million. So as of this year, 2026, that annual limit is $19,000. So one can gift someone $19,000 each year, and it's per person per year. So for example, a married couple can each give someone $19,000, right, for a total of $38,000. It doesn't apply to the limit. And mind you, this is per person per year. So one could, in theory, give $19,000, let's say, to 10 different people every year, and you wouldn't have to worry about the gift tax, right? Because each year you would be under the exemption because it is, again, per person per year, the 19,000. And then also keep in mind that this $19,000, it does increase. I would imagine it's indexed for inflation. So it does go, I don't know if it goes up every year, but they do try to keep up with times. I remember at one point it was $10,000 a year. I don't remember how long ago that was, but at one point it was 10,000 and now it's 19,000. So that amount does go up over the course of time to keep up with inflation. So if you were to give someone that 19K every year, you're good to go. So you would avoid that. Now, if you were to exceed that, so you're giving more than the 19,000 to someone other than your spouse, that needs to be reported. Okay. And the way you have to look at it is that, again, the tax doesn't kick in until you give the 15 million, but you go over those exceptions that I mentioned, you have to report it, and you have to look at it as if it's like a ledger, keeping a ledger, and you're tallying up against that 15 million. So for example, let's say if you give someone $25,000 in 1 year, so your first 19 is good to go. You don't have to worry about it, but that 6,000 over the 19, you do have to report that, right? And that's where the gift tax return comes in, where when you file a gift tax return, a lot of times there's really no tax to pay, but you have to report it against that 15 million. So every time you go over the exemption limit, you have to keep track of that. And by filing the gift tax returns, that's the way that you keep track of it. So going back to my example, you pay that 6,000 over the limit, you have to go in and file the return. You knock 6,000 off of that 15 million, right? If that happens again next year, you pay someone $30,000. The first 19 was exempt. You have to go in and report that 11,000 for that year, right? So now you have 15 million less the 6,000 year one, that's less the 11,000 in year two, and you keep track, so on and so forth, right? Until you hit the 15 million. Now, most folks won't necessarily hit that threshold, but you do still have to do the administration part of it. Even though most folks may never even hit that threshold, you may have no intention of ever hitting that threshold. But again, you go over the that 19K, you got to do it. So that's, I guess, the toughest thing, or a part about with most folks, is just remember taking care of the administrative part to report what you paid out in gifts. So that tends to be the hardest part about it. Now, one other thing to note, that because of gift tax, and that's form 709, the exact, that you fill out each year. And again, it's really just for the most part, informational return. Now, it is a little different from an inheritance tax. Now, inheritance tax is actually at just the state level. The IRS does not have an inheritance tax. So they do have an estate tax. I'm not going to get necessarily into that, but states have what's called an inheritance tax, and not every state has it. So I'd say it's only really a handful of states. No, I can think of offhand is Jersey. I know that well because I'm in New Jersey, and I think Pennsylvania. So I'm not sure. It's a handful of states. I think it's only 5 or 6. So you can check your state to see if you do indeed have it. But they do have an inheritance tax, and every state is different as far as who gets it, what the rate is. You can look into that with the inheritance tax. And again, which is all different from an estate tax. So the estate tax is more so if you have someone's assets when they die that hasn't been gifted to anyone as of yet, or first, as of yet, if someone has assets that generate income, then the estate has to pay the taxes. So it hasn't been, quote unquote, gifted yet, because assets don't necessarily get gifted right away. So let's say if someone has a rental property, it hasn't been accounted for as far as who gets it, or maybe it has been accounted for as far as actually who would get it if someone were to pass. But let's say it's generating rental income. If the person is passed on, then that person can't pay the taxes as that person's estate, right? And then once it gets gifted, then we get into the gift, the inherited tax, and then the person takes over, then has to. So in a nutshell, that's what the estate tax is and how it's different from the inheritance tax. So hopefully this part was helpful. Just try to give a brief overview how that, as far as how that stuff works. And if you have any more questions relating to this topic or any other tax or accounting related questions, feel free to reach out. I'm happy to help.